Good morning, HOD and my seminar guide Professor Ikti Chaturvedi sir, seminar coordinator, division master, faculty member, examiners and my batchmates. I am Devansh Marwal, pursuing my BTech from University Department of Mechanical Engineering, Rajasthan Technical University, Kota, Rajasthan. Today I am here to present my seminar topic price action trading. These are my list of content. Throughout my presentation, we will understand what price action trading is. Then we shall talk about their terminology like support, resistance, trend lines, market behavior, candlesticks, and candlestick patterns. So let's start. So coming on the topic, what is price action trading? First of all, we can discuss price. What do you understand by price? Price is a financial terminology used for how much money has been paid to acquire a given product. And let's talk about trading. Trading is basically a term used to buy and sell any financial instrument like shares, forex, without directly owning them, in the hope of making a profit from changing their prices. So you understand what is price and trading. Now let's talk about price action trading. Price action trading is a method of trading where traders make a decision about trades based on price momentum rather than on indicators. Now we talk about support. Basically, support is an place or area where buyers push market upside and sellers become neutral. In this scenario, so let's talk about its examples. So our next slide is all about its. Let's go. In this slide, you can see zigzag lines moving up and down, known as candles. We cannot talk about candles right now, but we cover them. So you see them. It is a price momentum on behalf of buying and selling by buyers and sellers. Green candle shows price move upside and red ones show downside. In this, you all see a white line placed in there which shows whenever sellers come in this area, price goes up, which means it is a place of support where buyers start buying and selling does not sell. Now we go on the next slide, which is about resistance. Resistance is basically the opposite of support. In resistance, buyers become weak at a place where sellers start selling. Now look at the chart. What is resistance? In this, you can see a white line where sellers pressure is high, is known as resistance area. Let's see support and resistance together and know how it's work. In this chart, you see a support area which shows area of support, which means you can buy at the place and see area of resistance, which means you sell it resistance level or vice versa. So I think you can understand here. So let's move on the next slide, which is about trend line. Trend lines are the lines which traders go on charts to connect a series of price together. The resulting line is then used to give the trades a good idea of the direction in which an investor value might move. Basically, trend lines are of two types, uptrend and downtrend. First, we discuss about the uptrend. Uptrend line has a positive slope and is formed by connecting two or more low points. The second low must be higher than the line to have positive slope. It's all about buyers buy at the support point and it's look like a uptrend, like vertical moving higher high and lower low. Look at how uptrend look like showing in next slide. In this slide, you see price moving up direction, making lows low and higher high. It's mean it is a uptrend. Now the downtrend line is basically opposite of uptrend. In this, seller sell a resistance point and it is look like downtrend. Line vertically move higher low and lower high is known as downtrend like over. Next slide is how it's look like. In this slide, you see price moving downward, which means it's moving lower high and higher low, which indicate it is a downtrend. So move on the next topic, market behavior. Markets are always changing. It can be an uptrend, downtrend, range, low volatility, high volatility, etc. But if you take a step back and look at the big picture, you realize the market trend to be in 1 to 4 stages. So let's discuss them. First one is the accumulation stage, which means a sideways or range bound market consoled for long period of time and which is generally occur after the downtrend, which helps to understand us to take our trading decision in the direction of trend, because in trading trend is your best friend. If you follow trend you make money, or you not follow that you lose it. In this slide, you see a controlled area is known as the accumulation stage. Now, second one is the advancing stage occurs when the market has been stable for a while. Accumulation stage and it start moving higher. It's is occur after accumulation stage. In this, you see a breakout of long consolidated market known as accumulation stage. That uptrend is known as advancing stage. Third one is distribution stage. It is a simpler to accumulation stage, but the difference is it look place after uptrend and before the downtrend. In this slide, you see a range boundary market after the downtrend is known as the distribution stage. Now the last and final stage, which is known as the declining stage, is also known as downtrend with the series of lower high and higher low, and it is occur after distribution stage. You see it in this slide that after the breakout of distribution stage, price move down, or we said market behavior is declining. Now we move on our next topic, which is candlesticks chart. Candlesticks chart are also known as Japanese candlesticks chart. It is a style of representing price momentum. In this slide, you see candles. The first one is bearish candles, which show price moving down. In this, you see there is a narrow line between them is known as wick or shadow that indicates the intraday high and low. And red color shows price moving down, and the big space between them is known as the body, which represent the open to close range. Moving on next, doji. Doji is the candlestick pattern which shows the price moving neutral, which indicates that price moving in both the direction, but it is simplifying at that point. Also, if doji occurs at resistance, then the more possibility it goes down, and if it's make in a support level, then the more chances the price goes up direction. Doji candles look like a wick and short body. Hammer is also like doji, but similar to each other. Difference between them that it is not neutral candle. It shows positivity in market, which means buyers is more powerful than sellers. So moreover chances that price move higher. In this chart, you see it look like a shape of hammer. Shooting star is opposite of a hammer. Is also known as a hanging man, which moves sellers become powerful from buyers and price may goes down. In chart, it is shown that at that point here in hanging man found the price goes down. Bullish engulfing is a candlestick pattern which shows positivity in market. It means buyers get advance to seller and maybe price goes up. It's look like a giant candles which engulfing previous candles completely, and also not that the previous candles is bearish candle and the next one is bullish candle, and big size of the engulfing candle is 2. In this chart you see it. Bearish engulfing is opposite to the bullish engulfing candle. In this, buyer become weak in front of seller and price moving lower low. Representation of bearish engulfing candle is the previous candle is same and green, and present candle is red and big, or we said that it engulfing the previous bullish candle into it. You can see it in the chart. These are the references.